I think there's no other way of describing 2009. I think most of us are very happy to see the back of it. Essentially, if you look at our numbers, the story is told by the decline in sales. We did say we would match production to sales, so similarly our production was down, but our sales were down 30%. Down at a time when also steel prices were also down. So, sorry, sales were down 12% and prices were down 30%. So that combination tells a very big story of why profits would have headed down quite so significantly. Now, at the same time, costs didn't come down as rapidly as the top line did, because as you would know, in the steel industry, we're locked into long-term contracts, typically annual contracts. So coming out of those contracts was also a fairly lengthy thing. So our costs, if you look on the flat side, we're slightly up, 1% up year on year, down in the long product side, 10% down. So your costs stay about the same or they're slightly up, your revenues decline, there you've got the whole story.
You've rolled over your steel prices from January to February, marking the third consecutive month that you've kept prices unchanged. Clearly it's got to do with the rand-dollar exchange rate. When do you expect some recovery on that front? Clearly you haven't been able to benefit solely from the rising steel prices globally. At what level would you like to see the rand?
Well, it's a very dangerous question to ask me, because I'm going to tell you that we're very comfortable at a 10 rand to the US dollar, at which time people start throwing rotten tomatoes. But essentially, we wouldn't want to call a level for the rand. I think we'll join the chorus for a competitive rand. All we will say is that at the kind of levels it was trading in 2009, those were punishingly strong for exporters.
Looking at capacity production right now, you're currently sitting at 80%, at least for the fourth quarter, from an average of 65% for the first 3 quarters of last year. When do you expect to resume 100%?
If you look at what happened in fourth quarter, we restarted Blast Furnace C, which had been out of production since about the beginning of second quarter 2009. So with all our blast furnaces now back in operation, we're quite close, in fact, to full operation. We estimate that the average utilization for first quarter will be around 84%. Now, I do have to mention that the minute we start getting to the 85s and the 90s, electricity becomes a constraint.
On the electricity issue, Eskom is going to be increasing tariffs by between 25 and 35%. At this stage, what plans does ArcelorMittal have in place to try and mitigate the rising electricity costs? Is it about diversifying into producing your own electricity?
Firstly, on the tariff issue, we accept that tariffs need to rise and that Eskom has a right to price electricity at a level that covers their costs and allows them to operate their business sustainably. We just question the wisdom of a 35% per annum for 3 years in a row. We simply cannot afford it. It's as basic as that. And so we have also added our voice to NESA hearings to say that we don't believe that's a prudent step to take. But I always have to just also raise the fact that for us, the reliability of supply, security of supply of electricity is a huge issue. And so while we're talking tariffs, there's also just this sense in my head that with economic activity in South Africa picking up again in 2010, are we certain that we'll see this year through and next year without load shedding again coming into play? And that's a very, very big issue for us.
Annual contracts currently being negotiated and are expected to be concluded by April. Could you give us some insight into the negotiations which are occurring between the miners and the steel makers? Some say that prices are expected to rise by about 40%.
Hard to say, you know, at this time of the year, there's always a jockeying for sort of airspace, because the miners are obviously talking it up and the steel makers talking it down. So it's best to just keep to the sidelines and watch from a South Africa vantage point, because this tends to be a game played by the Brazilians and Australians on the one side and the Chinese on the other. All I will say, though, is that in the December and January time space, we saw quite a bit of volatility in iron ore spot prices. It went to $130. The next week it was $140. It came back to $130. So at this point, quite a bit of volatility, so you know something is going on. As to where the benchmark will settle, well, let's watch and just wait.
Also a lot of talk in terms of government protecting ArcelorMittal from overseas pricing and also imports coming into the country. What is your response to that?
I wish. It's never happened in my experience. And from my interactions with the government, I don't believe it ever will happen.
It's interesting because a lot of people just keep talking about it.
I mean, perception is one thing, and I think facts are another. If you look at import tariffing, because ultimately that's how you're going to measure whether there's protection or not, there's no import protection, import duties on steel imports into South Africa. So anybody can import, and in fact, people do.
Speaking of government increasing competition in South Africa, they are talking about starting a new steel company in South Africa, given that ArcelorMittal was formerly known as ISCOR, which was a government body. Why do you think government wants to step in now and start a new steel company? Is it about the fact that when ArcelorMittal took over from ISCOR, that they slashed quite a lot of jobs?
You know, Eleni, I have to say that companies and company bosses have a duty to operate their companies profitably. They have to do so in order for the company to be sustainable. A situation where you run out of money and you run to your shareholders is simply not tenable for a private sector company. Perhaps you can do that if you're a public-owned company. Therefore, it was right and it was proper for ISCOR at that time and ArcelorMittal today to constantly look at their productivity levels and their cost of production and continuously do something about that. And that's all that the company did do. And it is now recognized as a competitive company in its sector. As to why government wants to introduce competition, look, I personally support that. I think it's a good thing. We have an 80% thereabouts market share in flat products, which clearly does not satisfy government's objective to introduce competition. And that's the background against which that is being done. As to whether it is realistic for the government of the day to start competitive firms in the private arena is also something we can debate another time. But as I said, we're relatively relaxed about that. All I would say is that we would expect a level playing field if and when government does introduce competition.
Demand from China, India, Brazil, Africa looking relatively robust, and we are seeing a recovery in these regions, but of course the UK and Europe still very much under pressure. When do you expect these economies to recover? And obviously if you could give us some insight into when you'll be bringing back that dividend, is it about those other regions recovering as well?
Well, the bulk of our produce, actually I would say probably by now 95, 98% is destined for the African continent, specifically sub-Saharan Africa. This focus has been a focus for the company for the last 3-4 years. It couldn't have come at a better time because, as you say, those other markets started their tailspin downwards. Your guess is as good as mine. The IMF thinks that this year developed markets will post some kind of positive growth, albeit quite weak. We tend to not forecast those markets because, as I say, we don't service them. But in sub-Saharan Africa, the World Bank is calling a 5% growth rate for this year, I believe, and in South Africa 2.5% as a planning number. So we think that our markets will hold up rather better than the others. We hardly sell anything to the BRICS. We watch them, of course, because particularly with China, with it being such a dominant producer now in the steel sector, we watch where they export products because that could start destabilizing our export markets. So if I now go back to our dividend, we did not declare a dividend, or we declared a nil dividend, given that our earnings were negative. We have a dividend policy where we distribute a third of our earnings, no earnings, and therefore the dividend was withheld. Clearly, then the debate becomes we've got cash, and if we don't find attractive propositions for that cash, we may need to have another think about that. I'd remind you that during 2009 we had a massive share buyback where we did distribute quite a significant portion of that cash. So for the time being, I think that we're comfortable with the levels of cash that we're holding.